end of the week, and we're going to do our weekly Forex forecast, Bears versus Bulls, for the week of July 25th, 2021. And I hope you guys are doing well. You had a great weekend, and you had a good week of trading. And it's always good to relax after uh, you know uh, a, a, a week that we've had. But it's always good to after you relax and plan for next week, right? So this is where we come in. I'm going to do this on Fridays instead of the Sunday. That way I can have more time at church, keep my mind kind of focused on the Lord and stuff like that. And so I'm going to make this available to you, give you some time to actually get your trades planned for the week ahead. Okay. So without further ado, let's get on with Bears versus Bulls, the weekly Forex forecast. All right. And before we get started, this is a presentation of Elite Traders University. And we are going to direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And it's good to be with you. For those of you who are brand new, who do not know who I am, I'm a 25-year trading veteran. I'm the founder and CEO of the Elite Traders University and the Forex Cash Machine. And I trade options, futures, stocks, crypto. I'm one of the foremost authorities of short-term day trading called Scalping. And we have a unique way using institutional order flow imbalance to be able to actually forecast the market ahead of time. And so we've been doing a series of live demonstrations on the and recorded demonstrations of the Pip and Run system that you can see for yourself, our results, and you can actually our goal is to show you that what I can do, what it took me 25 years to do. We have a system, a proprietary system, accelerated learning dynamics within the Elite Traders University to help you learn how to trade with greater clarity, with greater accuracy, to be able to forecast price and to be able to perform trading. And it all starts with training, DIYing it yourself, usually is a challenge. And you can actually see some of my students posting their results. And you can see that if you'd like to have those same results, then you need to book a call at Elite Traders University /apply, and then make sure that you sign up. Also behind me, I have my market heat map. Is an arrangement of currency pairs by percentage change. It tells us what's hopping, what's popping, what's dropping, and what's not. It's a powerful tool that we use here in the mentorship to find trade setups. And also, there's lots of tools, $9,500 in bonuses, including an 81 video course, Forex Foundations video course. Okay, so let's go ahead and dive in. We're going to dive into the economic calendar, and we're going to find that on my market heat map. Let me go ahead and get there before we get here. And my market heat maps range of currency pairs by percentage change. But one of the tools, there's lots of tools here. There's heat maps, there's charts, there's quotes, technical indicators, calculators. There's also a 30-day, you get free signals for 30 days using our system. And so that is a really great way for you to learn while you earn, using signals based on my system. The system, the trading auto trading system is offered by a trading partner, and we are very happy with the results. And so check them out. So you get access to that for 30 days, and with your My Market Heat Map purchase. Okay. Heat Map 75 is the coupon code you will use to get 75% off the regular price as well. Okay. All right, let's get to it. So we're going to look at the high impact items for Tuesday the 27th. There's no high impact items for Monday. So Monday we get a little bit of a respite, and also Sunday will be a rest as well. But we're going to start off hit the week running with durable goods orders. That's going to be 8:30 a.m. Eastern time. Previous number 0.3, no forecast is given. Durable goods are like refrigerators and airplanes and huge land, earth moving equipment and trucks and things. Those are there's one number with transportation such as planes and trucks, and there's one without those kinds of things. The durable goods orders will probably be the one with transportation will be affected because of the chip shortage that's hit the car manufacturers. the shortage of chips has reduced the number of vehicles being produced. However, the number without transportation is forecast to be at 1.9%. Now, all this means is for us is we're going to be looking at the euro. Now, I'm not big diving into the actual numbers to get bogged down in the data. What I look at it as news, as seeing it as a point in time where people will be very interested, especially in the summertime, to actually place a trade. Okay, if you ever saw the movie Trading Places with Eddie Murphy, they're commodities traders, and they are trying to get a hold of the crop report. The crop report, so they can make trades on frozen concentrated orange juice. I mean, those old guys that they were trying to steal that crop report so they could know how to trade the announcement before anyone else would know. And they hired this guy named Clarence Beeks to find out, to actually get that envelope that had this secret, the actual announcement results, right? So, and then when they found the results, they had the fake results, and then the other guys went out of business, and Dan Aykroyd and Eddie Murphy made a lot of money. So this happens, it's in the movies, right? In fact, in Coming to America, Eddie Murphy gives the old guys some money, and they say they're back in business again. So those two movies are linked. So if you like Coming to America, and you saw that scene with the two old guys, those were the commodities traders that were from the movie Trading Places. So this type of thing happens all the time. Whether it's a Clarence Beeks stealing the announcement and people trading off the news, well, that's another story. But what we can do is, we know that at this time, at 8:30 a.m. Eastern time, there is going to be some type of announcement. Let me go ahead and say hello to this. We're live streaming this, so big howdy do to those people who are all my fans, and all the people who are on YouTube, Twitter, and Instagram, as well as on Facebook, and also our Forex Cash Machine group. A big howdy do to you as well. And let's see, we got streaming errors when something is. So we have one person doing the Forex Cash Machine, and the Twitter one is maybe not working. Okay, so I just want to make sure. If you can hear me, this type of number one, I'm going to go over to the group just to make sure that we are not talking to the air. We are making up a backup recording just in case this does not come through. I can still upload it. I see. Yes. Okay. Awesome. Oh yeah. And I also want to congratulate my buddy. Now that we're in the Forex Cash Machine room, just want to see who over in here. We do have, I want to show John Condabile, big congratulations to you. 304 pips this week, not too bad for a slow week in July. Big congratulations. Big pip and run congratulations as well. And also, I did mention JD. This really, he took it to oil, crushing the oil. JD, nice. Just big congratulations to you as well. And John posted some of his trades as well. I might have shown this already, but good job, John. Okay. So make sure, if you're not a member, you can join the Forex Cash Machine group as well. Okay. Look, and here we go. So we got the dollar is going to be in play. So dollar CAD, dollar Swiss, those are the currency pairs we want to be looking at when this announcement comes out. Now, another strategy which we have, because what's been happening is we've seen prices moving in one direction, and then maybe for an hour after the news, it kind of goes in the opposite direction, right? And then after an hour, prices seem to go back into trend. And so we want to maybe look at this, maybe instead of being there at 8:30, maybe show up around 9:15, right? Just about 15 minutes before the hour, and seeing the we'll call it news fade, a news fade. And if you're interested in learning the news fade reversal strategy, go ahead and make sure you can private message me in Facebook, and I will share with you my news fade strategy blueprint. Okay. So instead of being here at 8:30, we'll be here at 9:30. We're looking at the currencies we want to be looking at. We want to be looking at the majors. Okay. So what we're going to look at is, I just made a little notepad because I can't see it there. But we're going to be looking at trading the majors during these announcements for 8:30. Dollar CAD, dollar Swiss, euro dollar, pound dollar, Kiwi dollar, and Aussie dollar. These are your major currency pairs. Notice how they all have USD in them. And so what we expect is if we have a good number, that the dollar usually sells off. Okay, dollar usually sells off when we have a good or positive number usually, and we usually see the euro and the pound and the Kiwi dollar and the Aussie dollar actually rally when we have good data. Okay, so but we're really not really dependent on the data. We really want to see where these actually retrace. But these are the pairs we want to be looking at. Those are going to give us the biggest, usually give us the biggest bang in the for our buck. Okay, and I'm going to say usually because I've been doing this for 25 years, so I've seen this a lot. However, you know, there's always the exception to the rule. There's always a year that's different than all other years. So even though I have this experience, I have to qualify and say usually this is what's going to happen. But like for instance, Aussie dollar was a much better trade instead of the euro for ECB. And who would have thought that with the Australian banks closed, that the Aussie dollar was up 0.54% at 9:30 a.m. Eastern time, right? And it was a much smoother trade than the battle that we had with the euro. We eventually turned that euro trade around, and hopefully, guys, you saw we got it back up over $4,173. But it was a challenge. Okay. So, okay. And we are going back to economic calendar. Okay. And, okay. I lost you. Okay. So, and then we're going to have later on in the evening about 21:30, which is 9:30. We're going to have the consumer price index out of Australia. That's going to be an inflation number. And the 0.6% was the previous number, no forecast. Again, we might want to, the Aussie numbers are kind of different. They seem to be, you know, triggering right on schedule, right? 21:30, so 9:30, you know, we'll take a look at that. And, you know, these Asia session news items for Aussie and New Zealand have been banging. I mean, we make money from entry on those. Okay, New York get a little choppy, but the Asian ones, and we'll see. You know, we got to treat each event on its own merits. But we're looking at the consumer price index, so we want to look at the Australian dollar. We also want to take a look at any of the other Aussie pairs as well. Aussie CAD, Euro Aussie, also Pound Aussie, Aussie CAD. Okay, so those would be in play during this time. And then at 8:30 on Wednesday, July 28th, we want to look at the 8:30 a.m. Eastern time. We're going to have the consumer price index month on month, which doesn't stand for mom, but it's going to compare the month of June to the month of May-June. The May-June number comparison to see if there's inflation in the pipeline. Usually higher inflation means that the currency gets stronger, but again, we want to check out what's going on at 8:30, and you know, if we get some type of really weird price action at 8:30, we want to check back at 9:30, okay, for our news fade reversal, or maybe 9:15. Bank of Canada Consumer Price Index report also comes out as well, and that's month on month. So we have two inflation things coming out, and then we can look at different Canadian pairs for that. We want to look at dollar CAD, CAD yen, CAD Swiss, pound CAD, Euro CAD, Kiwi CAD, and Aussie CAD. And what we're looking for is like, hey, if it's trading near some support, near Fibonacci, it looks really clear, you know. So I'm not gonna like rule out any particular one. I usually go to dollar CAD, but sometimes that's choppy. But you want to take a look, you know, during that time, the CAD will be in play, So that's where a lot of liquidity is going to be flowing based on this data. Okay. And then later on in the afternoon at 2 p.m., we're going to have the Fed monetary policy statement and the Fed interest rate decision. I think we had another interest rate decision. I think we just had one, right? And that's going to be pretty interesting at 2 p.m. Okay. And then sometimes if you have, this is a really, there's high and there's higher. So any central bank announcement is going to have a lot more weight or pull, and the market may just be flat until 2 p.m. Eastern time, which is this is when the FOMC is the Central Bank of the United States. Okay, is not the bank. We don't have like a Bank of America. Well, Bank of America is actually a commercial company. I used to work for Bank of America, but we don't have a Bank of America or Bank of the United States. We have the FOMC, which is an independent quasi-governmental agency, and its initials are FOMC. It's Federal Open Market Committee. Widely expected to keep rates unchanged at 0.25%, and they're probably not going to raise rates, but they're going to give their guidance and things like that. And it seems like they just had I think we had Fed minutes. That's what I'm probably thinking about. And for something like this, again, we could look at any of the major pairs: dollar CAD, dollar Swiss, euro dollar, pound dollar, Kiwi dollar, and see where the interest is, see where there is significant movement near key levels of support and resistance. The closer we can enter near support and resistance, that's going to give us our best trades. Okay. On Thursday, July 29th, we're going to have gross domestic product, GDP. That's at 8:30, and again, if nothing's going on at 8:30, 8:35, then we want to check back at 9:15 on this one to see. Now, previous number was 6.4%. They're expecting a forecast of 7.9%. And however, GDP is a backward-looking. It used to be pretty big back in the old days, back like in 2000. GDP was like up there with NFP. But there's so many other leading indicators and different types of other economic announcements that come out during the month beforehand that you can probably guess what this is going to be. Pretty much by what you rarely get a surprise from GDP because it's backward looking. So 7.9 is the forecast, and so we could see the dollar sell off unless there's some inflation worries by the Fed. Okay, and so inflation worries by the Fed could trigger a dollar rally, which could tank your stocks, and your commodities as well. Stronger dollar is going to drag down Bitcoin. It's going to usually drags down the stock market, and usually drags down your precious metals like gold and silver, as well as oil. So that's the only high impact item we have for the 29th. And wrapping up the last trading day of July, where does all the time go? It seems like things just really go so fast. We're already into July already. We're on gross domestic product, or GDP, month on month, comparing the May number to the June number for Canada. And again, we can look at those Canadian pairs. So the Canadian dollar is going to be starring in some parties, party on Wednesday and party on Friday, and then the euro probably going to be in there as well. Okay, so this is our economic forecasts based on what we're going to be looking at. These are the pairs that we should be looking at during the week. Okay, now let's go into our technical picture. Now, our technical picture, I really like to start with the DXY, which is the US dollar index. So if you understand what the dollar is doing, I tell my students in mentorship, if you understand what the dollar is doing, then you know what 7 currency pairs are up to, because they have dollar. The majors have dollar, and these make up the most amount of volatility of share. The share of trading volume is in your dollar and the euro. Okay, they make up like 85%. And I'm going to see if I can. Okay, we've got a lot of stuff going on here. I'm going to move drawings. Okay, so here we go. This is a daily of the U.S. dollar, and we hit nice bit of support here down here at 89.57. Nice double bottom, and the dollar has been gaining some strength. But we're approaching some. We came down here, down these lows, and this took off. We do have some overhead resistance here. We have a supply, lots of supply up in here. We're in the 93 area, and then we have a bit of supply going back here at the 95, close to the 95 area, 94.80 or so. So we have some overhead supply. Okay, and this was a nice demand zone here. We'll just do a little green action there, right? And then we nice demand zone there at the 92.75 to 92 whole number round number. And we have a secondary level of supply in the 94. So whole number round numbers are usually we find these zones, these hidden levels of supply of support resistance or supply and demand, right? But that's, you want to be aware of that. And usually price, what it does, it doesn't, if it sees lots of resistance, it kind of like says, it's going to look for the place where there's more gapping space, right? And we could probably reach 93.37 and maybe a little bit higher, and then maybe we could draw a trend line across these lows, right? So we have an uptrend. We have higher swing highs and the higher swing lows. I'll make the demand line green as well, and so we have not broken that line. Okay, in fact, we have a low at 92.51, but we're running up against resistance there. And so we're kind of like sandwiched between a rock and a hard place there, right? And then we have just classic resistance there and some whole bunch of resistance there. So if we break 92.76, then we could look for this to turn, right? So short-term bullish, we could spike up one more push up toward the 93.28 area. Now I like confirming to see if there's some type of Fibonacci relationship as well. I mean, there's all kinds of resistance up here, congestion, but we're probably not going to hit that anytime soon in the US dollar, unless they start hiking rates, and then we can see how it comes up with a blast off. But the Fed wants to keep things, if it can keep things sideways, right? It's kind of like Goldilocks, not too hot, not too cold, just right kind of thing, right? So we want to keep so they want to, they don't want it to get too high, and they don't want it to get too low. If it gets too low, then asset prices start increasing, the stock market starts going too fast, the real estate starts getting too hot. So they're jawboning, and they call it jawboning, where they're not really intervening in the market, they're not really using any tools other than saying we're thinking about doing stuff. And that kind of freezes the market, and if it's too high, they say, okay, well, really the inflation is not really a problem, and we'll probably not raise rates until 2023. They're probably going to bring up what's going on with the Delta variant, new surges in COVID, which means, hey, the Fed stands ready and to support the economy in case, God forbid, we have another lockdown or any types of things like that. So, in face of rising COVID cases, we could see the Fed comfort the market, saying, "Hey, we're going to step in and we're going to support the market." That means they print more money. If they print more money, the dollar comes down, right? So that's something we would look forward to. 23% retracement at 92.57. We broke that handily. The next bit is actually at 94.56, and but we have an uptrend. We do have an uptrend. It has not ended yet, but notice how the candles are getting smaller. We're getting long wicks into the whole number. The round number is 93.00, right at the bottom of this channel here, or this rectangle. So there's lots of it tried once, rejected, and went up here, rejected, and it's touching right here. So, and then we came down and had a wick, so buyers stepped in. This was a full-bodied red candle, but then buyers stepped in and made it into a wick, and then we have buyers on the next candle, which is the next day. So we have 2 days of an uptrend with new highs, and so we have a little nascent uptrend from this wick here, right? So we have even a more steeper trend line, and that's bullish, right? So we're not going to, take any shorts or anything like this. We're not trading the dollar index, but all this means that maybe on Sunday and Monday, we, the dollar continues to rise, and we see the other currency pairs actually sink. So we might see dollar CAD rise, dollar Swiss rise, euro dollar drop, pound dollar drop, Kiwi dollar drop for just Sunday, Monday, right? And then we might even just move sideways through this trend line, just move sideways and break it, but break it on a sideways move, not on some push move. Because we do have the FOMC meeting, and that's probably going to keep things in a bit of a range. So we might be in a range between maybe 93.50 and 92.50, so 100 pip range, which means the other pairs would be similar. Okay, so if we can break 92.40 on the DXY, I would look to be long pound dollar, Aussie dollar. We would see that. However, if this level holds, if we break below that, we would see a short, being able to short those pairs. If we continue higher, weaker, it'll be a stronger dollar and weaker. So I would look at I'm actually bullish. I would be bullish the dollar until FOMC. And so this is what I would actually so that's what I'm gonna so I would be a bull. I would actually I would be bullish just for a little bit, right? Bearish long term, right? Okay, let's go. Let's get to the euro. Okay, and the euro is called. So let's take a look at that. Now this is pretty interesting. We just downward move. We have this really downtrend, lower swing highs, lower swing lows, right? We have an old low down here at 1.1711, and that's going to be probably where the euro will continue down. And it's breaking there's some serious resistance here, or support. These are weekly, the blue lines are weekly support, so it's gonna maybe break these suddenly, but the way this is looking like some type of ending diagonal, that we could find some support at 1.7004, and we could see a move down first, so, but this is an old weekly low, and we could see price rally off that, because then we would have our double bottom, right? We see our move back up to 1.1939, right? Especially if we have a Fed stepping in saying, hey, this COVID thing is starting up again, and we need to support the market, and so that would weaken the U.S. dollar with all the extra money printing, and we could see the euro actually rally. Okay, so again, I am short-term bearish on the euro. Okay, until 1.1713, and maybe we take a dip down, maybe into 1.1650 or so. Okay, but if that level holds and we get there a double bottom and the Fed comes out pretty accommodative, then we could actually see this switch from bear to bull. Okay, so then we see a bullish move about that. How do you like that, guys? How do you like that for special effects, right? Oh, yeah, got close them down. Bye. So there you go. So let's take a look at our next on our list. Remember, we're looking at the we're going to look at Aussie dollar because we do have some Aussie data coming out. AUD USD. And similar, I mean, the dollar's been extremely strong. This supply zone totally held. This demand zone did not. I mean, lots of resistance in here. And it just, that long wick, we tested it once, orders, and then boom, break down, and then broke down even more, right? So we've got, you know, we didn't even get across that zone. We broke zones, and we can get, so we have this, we have a double bottom here at the 0.7097 area, right? And we can just take a fib from that low to this high. If I can move this little piece of kit out of the way, it controls, and let's go up to here and then look for some overlap. And we see the 618 is at 73.78, and we're touching on that. We have a bunch of we had a supply zone here, which is flipped, you know, working. We're still below it, so the supply zone is still holding up. As but if price came back above it, it would become green, and then we would have it as demand. But right now, this is a key area, the 61% retracement of this move from 0.6987 up to a high of 0.08010, and so we pull back to this area, a confluence of congestion zone and Fibonacci, and so if we can get back above that, we would see, you know, maybe, you know, these old zones that are now, they're no longer, they're not demand zones anymore. They are now supply zones, right? So we might see price come up in there and do its thing, right? To either to keep price capped at those areas, but you can see that price has rallied up into this area, and we have a tweezer top. We have two candles of two long wicks on there side by side, which is bearish in a supply zone, and so we expect price to come back down and retest that low. And then, I mean, this is a daily touch that was, which is a bunch of congestion right back here. I mean, just a ton of it, then there and there, and so we came back to that. And it's round number also support 0.7300. Price rally, touch the zone. We may come back and hit that zone again. And so for the Aussie dollar, bulls versus bears, I think the bears have it for this one. Okay. Now if we can get I know I got a lot of trend lines and things going on. It was, you know, very, you know, you see people positioning themselves, you know, because they're looking at the support and okay, it's holding, double bottom, oh, rally, oh, doesn't, you know. So we've been seeing a lot of this whipsaw action, and you have to be very nimble. You know, if you're shorting if you shorted it from up here, congratulations. You don't even see any of this. You're just following the trend, right? But it's just down here where it starts getting dicey, where our big stops are right here at that 0.7600 area, and also at the whole number round number 0.7500. So if price got up in there and start hitting those stops, we would see an acceleration of price, maybe some type of a shoulder, head, shoulder, an inverted head and shoulder, and then price could come back and retrace back up to 76.76. But that's a lot of what if, right? And we want to like trade what is and not so much what is, right? Or But I would consider if we got above 7,400 a possible long. Okay, and that probably may happen later on the week after the Fed minutes. I mean, the FOMC announcement. The FOMC announcement could be a trigger for the Australian dollar to rally. Okay. So the next bit of news we would have is Canadian news. So I'm going to look at the dollar. I can look at a couple things. We can look at dollar CAD or CAD yen. CAD yen may be pretty interesting because the yen very sensitive to sentiment, to risk on, risk off sentiment. And this is a daily chart of the CAD yen. And you see a nice, it's very clean, a nice clean tag of the low, right? We tagged this low here at 85.40 back on April 21st, 2021, and we came back and tagged the same spot price as a memory. So it came back on July 19th, 2021. So we had a cycle, right? That cycle between the 21st to here, 64 bars, but basically a month, right? 60 days, so about a month between cycles. So, and we also have this old high here, which is, we can actually make that into our supply and demand zones there. So we had a nice demand zone, which was pretty cool. And price jumped in there. And the thing about it, if you saw this and this is what you saw, and you just saw this as a one tagged zone, right? Which would be green, not red. You can see how if you were trading supply and demand zones, you could set a buy limit at 85.44, and if you set that back in April 22nd or so and left it, boom, right? A month later, that's why it shoots up like that, because that's exactly what happens. People will actually place their buy limits in these one tagged zones, and when they're tagged, then price just shoots up right away because these orders are already waiting, right? So the difference between supply and demand zones and support and resistance is that there's actual supply and demand zones measures orders, because like once this, let's say price came back a third time, it may blow right through this. This zone may not extend like that, right? So it comes in here, it goes right through it because there's no buy orders. The buy orders got this and they're out, so there's nothing there. So if the price comes back down, there's no orders to pick it up, and it just keeps dropping. Now I have a video on that, and if you're interested, give me say, hey, I'm interested in your supply and demand zone video. Then we have a very special price. Now ordinarily it's like $1,400, but we're taking like 80% off of it. It's a supply and demand zone plus advanced trend line. So you combine trend lines and supply and demand zones, and you get all kinds of really cool trading opportunities. I mean, I can see I don't know why I missed this. There was so many, like, whoa, this is like, but hindsight's 2020, right? We've got that. So even here, okay, like we've tagged this zone, and so we expect maybe this zone to be retested again, right? So you see price coming back up there, which would tell me that the Canadian dollar might get strong on some of this data, right? We just have to watch some of the other zones that are in play, like here, these two lines here. Price broke, but then it's still, there's, sometimes after price reaches an apex, like forms like a dome, right? So they form this dome apex, and they'll put those orders back in again, right? For it to be re-tagged on the other side. Okay. So we've got a little zone right there, right? So we're in a zone, and then you can draw a trend line across the zone as well. very steep trend line. We could break that zone and head on back down to the 85.40 area, and we could see prices drop on that. Okay, so 87.92. So we can see a little bit of rejection. Even now, remember, this is that we got FOMC coming up, and if the dollar gets stronger, the dollar and the yen kind of move together, so we might see some rejection here. Maybe it forms another little rounded bottom set, but the trend is up, and we could break this, right? So I'm kind of indecisive because we just hit the zone again. I'd like to see what happens after 87.66. See if we get down to like 87.22, and then maybe see a retest of this area, right? So maybe it's not so clear. Let me try another CAD pair. Let's try dollar CAD. How about that one, right? And that sometimes that will happen. We'll look at something like, oh, maybe that's not going. Okay, so here we go. So here's, I mean, this thing went bazinga, went bonkers. I mean, it took out the zone here, hit that zone, pulled back into the zone again, and then launched rocket massive. You know, I didn't even expect. Yeah, see, we've got that cluster right here, and then so we rep this cluster is like the 87. That cluster right there, and you project that cluster out, and we were right into that cluster, and turned, right, turned right into that. Almost a tweezer top pattern at the 128.03, and the price came down into the zone again, right? So we broke that rising trend line, and let me get all this stuff out of the way. Okay. Well, we still have a rising uptrend here on the U.S. dollar is in a uptrend. But, you know, it tagged the line here, higher lows and higher highs. And so we might get a launch from here. So I'm actually bullish on the dollar CAD. We're pulling back to a trend line. And we're at 125.23. And maybe we can even retest 28.10, retest this zone out of here, right? And if we retest that zone by FOMC, and if the Fed is fairly dovish means they want to provide more liquidity, more money, you know, in the face of the new COVID variants that are coming out. Even they got a gamma one that's out too. It's like they're going through the whole alphabet. So be safe out there, guys. Be safe. You know, take precautions, wash your hands, mask, and all that stuff. I know it's kind of tough, but we gotta stick together and look out for each other. Okay. So here is that rally up to this area, and we can see price could come on down. Bob Barker, we could have a come on down moment after we retest this. But I am for dollar CAD, bulls versus bears. I am a dollar CAD bull. Okay, so bullish on dollar CAD. We're at 1.2561. I'm looking, wow, maybe 127 as an intermediate target. You know, back in here, and maybe up here it takes us to 27.54. Okay, all right. Let's take a look at the next currency pair that we want to take a look at. That might be it though, right? Oh, well, turn you off. Okay. Pound CAD. Let's look at the pound versus US dollar. And that took it on the chin. It rallied during, we had better than expected UK retail sales. Initially rallied. I did not take the bait on that baby. Daily chart. Again, this looked like an inverted head and shoulders. This is a pattern failure. Here we've got shoulder, head, shoulder. Then we have the rally, and then it just tanked, right? And then once you got past the right shoulder, then that invalidated the pattern and would wash out any would-be bulls, right, by this down move. And then we did a U-turn back up and back into the zone again, right? So we never got to any of these zones, and the pattern failure on this. And so the patterns are not 100%. Some of these patterns are like 60 and 70%, which means 40% of the time they can be wrong, right? So we, that's why we have, the stops below our, below that right shoulder. So this was a much more bearish move. And what we can do is look at the last pullback, take our fib from that low to that high. That's really a far one, but we see we made a new low, so let's take that one. Okay, so I took it from here to here, but then we made a new low, so that totally took out that spot there. So we used this low and that high. We took out this at the 38% retracement, and we could still work our way down 34.70, 50% retracement. This still looks a little bit bearish to me. I think we can come back and retest the low, at least 35.66. We're currently at 37.42. So we can, come down, and if we split the difference between that low and the high, I would maybe 36.59 or so, right? This is a fib, 23% fib, I think. Yeah, 38% fib, 36.59. So we come back and retest that, or retest the low, 35.79. Bearish, because prices lower swing highs, lower swing lows. We rallied back into the zone again, and the zone could reject and drop. So bulls versus bears, pound dollar. I am bearish, and considering that I'm bullish on the dollar, I am bear here. Okay, so GBP bear. Roar! Maybe I'll add some sound effects next time, right? Okay. So that is that's going to be it. I'm going to check the room to see if you have any questions. I'm going to try to do this without closing everything down. We're doing really good. We haven't. I guess there's a lot of bandwidth on the weekend. Like, how many people are actually broadcasting on the weekend, or using a lot of bandwidth, or maybe nobody's home using my internet. But let's see if there's any questions here. I'm sure you guys are probably out there enjoying the day. Okay. So I don't see any further questions. If you like this video, make sure that you give me a thumbs up, a like, and also if you're watching from somewhere else, go to the forexcashmachine.com and join. Become a member of our private Facebook group. We'd love to have you. There's tips, there's live trainings, there's webinars, there's all kinds of support. You can meet some of my Pip and Run students, ask them questions, and you say, hey, this guy, Greg McLeod, is he for real? Is he really doing this? Is he really helping people? I do sell things. I do have, tools and things to help you reach your goals. But I also have a lot of free things in order to support you on your journey, so you can buy stuff from me eventually, right? I mean, that's the whole idea, So make sure that you come on by and sign up. And if you really are serious about taking your trading to the next level, I invite you to apply to the Elite Traders University. We do have open enrollment currently, and you can set up a time to speak for our enrollment team, especially if you want to get more consistent results. You want to be able to pull out money at will and not spend a lot of time in front of the computer. If that's something would you like to do. I mean, this is results are not typical, but this is a $42,000 run on trading the UK retail sales an hour after. Actually, we did some non-farm payroll, not non-farm payroll, but ECB rate announcement, as well as the UK rate announcement. And we did have some losses, right? But still, we ended up positive at the end of the week, and that's what's important, right? And so, if this is the kind of results that you would like to make. You'll say, well, Greg, you're 25, you're a trading veteran, and I can't do that. I could possibly do that. You'll be surprised. I've had, Larnie, when she first joined us, Mira France, she said, oh, this stuff is Chinese, I don't understand it. And I said, you just stick with it, and it'll be very easy. You'll see this is the best thing since sliced bread. The pip and run system is the best thing since sliced bread. In fact, each day, each month or day or year that you are not trading this system, you are losing money. Losing money because you are not making as much money as you could possibly make. Making money on demand whenever you want to, pips on demand, pip and run, and being able to do it in a short amount of time, spending maybe a couple hours a day, maybe even just a couple hours a week. And if you trade like this in a day or a couple of days, why would you want to trade anymore? And it frees time. The whole idea is to get your time back, okay? And if you would like to even, we've also had somebody, there's a company that actually took what's in my head and actually put it into a code. And we're offering a 30-day free trial of that trading system when you join My Market Heat Map. My Market Heat Map, there's a partner button. If you go in there, you can actually take a look at these signals and try them on a demo account, see if they work. You can try it for 30 days, and then after that, it's just $19.99 a month. I think it's a pretty cool tool while you learn. Earn while you learn. And so there's premium signals by right there by FX Trade Copies right inside your account when you go ahead and become a My Market Heat Map member. Basically you buy access, 75% off. Use the coupon HEATMAP75. That way you will be able to get this at a substantial discount. Normally it's $199. But you can get 75% off. You can even try it for 7 days for $1. And if you don't like it, hey, you know what? To no harm, no foul, just cancel it, and that's it, right? You can even look at the front page. This is the live heat map right there. You can even watch a video about it as well, about how to use My Market Heat Map. And you can see that it's not just heat maps, it's a trader toolbox, it's education, and it's a whole lot more, okay? So we have a lot of things to help you, to support you in your trading, including $9,700 worth of bonuses. And you can go ahead and just go ahead and click the link below, or just go to www.mymarketheatmap.com and go ahead and get this tool. This powerful tool is my top secret tool that I've used for years. Either my own form of the My Market Heat Map. Okay. So anyway, that's it for me. My name is Greg McLeod. Enjoy the rest of your weekend. This is the Forex market update, and I wish you all the best. Peace and pips. Cheers. Bye.